Welcome to Smart Eye News TV. The SEC has just made one of the biggest moves yet in their campaign to turn crypto into a security. This is not just good or bad news. You need to understand what this means. Today's video will cover all the details. Let's get right into it. The United States Securities and Exchange Commission has announced that it is bringing U.S. financial markets on-chain. They are doing this through a new initiative called Project Crypto. In today's video, we're going to take a look at the official announcement from the SEC. We're going to see how this will impact both traditional finance and crypto. And stick around until the end, where I'll share my thoughts on this monumental move. So, let's start with the SEC's official press release. They have debuted this new initiative called Project Crypto, which they say will explore how tokenization can improve the efficiency, accessibility, affordability, and security of capital formation. Now, to understand what this means, we first need to define the term tokenization. Basically, tokenization is the process of creating digital assets or tokens that represent underlying securities like stocks, bonds, or other types of investments. Think of it like this. It's sort of like fractional ownership. For example, if you buy a stock in Apple, you don't own the entire company. Instead, you own a fraction of it. That same concept applies here with tokenization. Now, with the announcement of Project Crypto, the SEC has proposed to tokenize several different types of securities, including equity, debt, funds, and even digital assets themselves. Gary Gensler, the chairman of the SEC, said, "Our investor protection mission is constant and does not stop at public markets. We're always looking at emerging technologies that could improve our markets and protect investors." Now, this isn't the first time the SEC has dabbled with the idea of tokenization. In fact, they created something similar back in 2019 when they launched a program called the SEC Token. This program was designed to allow companies to issue security tokens to raise money. However, the project didn't really go anywhere. But now, the SEC is bringing it back under a new initiative called Project Crypto. So how exactly will this work? Well, the SEC hasn't provided many details yet, but they have released a conceptual document that outlines the main features of the project. One of the key aspects of Project Crypto is the use of distributed ledger technology, or DLT for short. Essentially, DLT is the underlying technology that powers cryptocurrencies like Bitcoin and Ethereum, and it allows for secure and transparent record keeping. The SEC believes that by using DLT, they can create a more efficient and cost-effective way to trade securities. Another important aspect of the project is the use of smart contracts. If you haven't heard of smart contracts before, it's basically code that automatically enforces the terms of an agreement. So, for example, if you want to borrow money from someone, you could create a smart contract that automatically charges you interest and repays the loan on a specific date. Smart contracts can also be used to automate other tasks such as transferring shares of stock when a shareholder dies, and this could potentially save the SEC millions of dollars each year. But wait, there's more. Project Crypto will also include features to prevent market abuse and insider trading. Insider trading is when someone buys or sells a financial asset based on material, non-public information. For example, if someone buys Apple stock because they know that the company is about to announce record profits, that would be considered insider trading. And the SEC wants to make sure that this doesn't happen with security tokens. To prevent this, the SEC is considering requiring all trades to be reported to a central authority and will use advanced analytics to detect suspicious activity. So you might be wondering why the SEC is doing this. What's the point of all this effort? Well, the answer is pretty simple. The SEC believes that tokenization will make financial markets more efficient, accessible, and affordable. By using distributed ledger technology, the SEC can reduce the cost and complexity of trading securities. This could potentially lower fees for investors and make it easier for small businesses to raise capital. However, there are also some risks associated with tokenization. For example, the SEC is concerned about the potential for fraud and market manipulation. They're also worried about the impact on traditional financial institutions. As we all know, the SEC has been cracking down on crypto in the United States for years. Just recently, they filed lawsuits against Binance and Coinbase, two of the largest cryptocurrency exchanges in the world. The SEC alleges that these exchanges operated illegally without proper registration. and that they violated several securities laws. In fact, the SEC has been treating cryptocurrencies like securities since 2017, when they published a report that said that most ICOs or initial coin offerings were actually illegal securities offerings. Since then, the SEC has taken a tough stance on crypto regulation, and the VAC sued several high-profile crypto companies, including Ripple Labs, Kick Interactive, and most recently, Telegram. There are a few reasons why the SEC is taking such a hard line on crypto. First of all, they want to protect investors from fraud and market manipulation. Cryptocurrencies are still relatively new, and many investors don't understand the risks involved. This makes them easy targets for scammers and con artists. Secondly, the SEC is worried about the impact of crypto on traditional financial markets. They fear that if cryptocurrencies are allowed to operate without oversight, they could pose a systemic risk to the broader economy. And finally, the SEC simply doesn't want to be left behind. They want to make sure that the United States remains a leader in financial innovation. But let's get back to today's video. What do you think of the SEC's latest announcement? Are they being too aggressive with their crypto crackdown? Or is this just part of their job? Let me know your thoughts in the comments below. So let's take a step back and look at the bigger picture here. What does this announcement say about the future of crypto regulation? Well, I think it's pretty clear that the SEC is not a fan of crypto. They've made it clear that they believe most cryptocurrencies are securities, and they've cracked down on several major exchanges. However, this announcement is not necessarily a bad thing. In fact, I think it's a sign that the SEC is starting to come around to crypto. Several years ago, the SEC would not have even considered allowing a cryptocurrency exchange to list a security token. But now they're saying that it's possible and that they're open to working with companies to make it happen. This is a big shift in thinking, and it shows that the SEC is slowly coming around to crypto. I think this is a positive development for several reasons. First of all, it shows that the SEC is open to new ideas. They're not just stuck in the past and resistant to change. This is important because the crypto industry is constantly evolving and the SEC needs to be able to keep up. Secondly, it shows that the SEC is willing to work with the crypto industry to find common ground. This is important because the SEC has a lot of power and they could easily crush the crypto industry if they wanted to. But instead, they're trying to find a balance between protecting investors and allowing the industry to grow. Finally, it just shows that the SEC is making progress on crypto regulation. We've all been waiting for the SEC to come out with clear guidance on crypto, and it looks like they're finally making some moves. Of course, this is not the end of the story. The SEC still has a lot of work to do, and there are still a lot of unanswered questions. But this announcement is definitely a step in the right direction. And that's it for today's video. I hope you enjoyed it and learned something new. If you did, be sure to give it a thumbs up and subscribe to our channel for more great content. Thanks for watching, and we'll see you in the next one. Hey guys, I hope you're enjoying this content so far, and I hope you subscribed already. If you didn't do it, and if you did, watch this video right there. I think that will help you too.